Alrighty, good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Monday, October 10th, and we are at the top of what is expected to be a very volatile week. We have among earnings numbers being announced Friday for financials, or starting for financials, I should say. We have Wells Fargo, JP Morgan, Goldman, and Citi all on Friday. We also have FOMC minutes coming at the close of the U.S. market on Wednesday, which should give some guidance into how the Federal Reserve is thinking about future interest rate hikes and the current state of the economy. And then we have the big numbers, which are CPI and core CPI. So CPI, Consumer Price Index, previous month was 0.1%. It's predicted to come in higher at 0.3% month over month. But the interesting thing is core CPI came in at 0.6% last month, month over month, and is predicted to come down to 0.5% month over month. So we can definitely see a realm where both of these are either a miss or a beat. Basically, you want CPI and core CPI to come in lower than expected. So you want CPI at 0.3% or lower. You want core CPI at 0.5% or lower for bullish price action. If we get the exact prints, I think it might continue to be neutral. But we really want to see it beat, meaning 0.2% for CPI or lower and 0.4% for core CPI or lower. So we'll be talking about that more often throughout the week, but those are the big numbers that the market is definitely going to be looking towards. As for sentiment, hourly sentiment looks pretty solid. Obviously, we did just have a dip, so it makes sense that people are eyeing some sort of recovery. Daily sentiment has come off greatly since last week. Bitcoin was quite bearish. Ethereum is still neutral to bearish, and a lot of coins are now in that bearish category. XRP was a big one. Solana is now bearish, and a lot are still bearish neutral, although we do still have some outliers. Uniswap was an interesting one that rose greatly last week, but is now facing similar fate as others. But Tron still up 3% over a week and up 1% in 24 hours. Interesting one to look for there. I've seen Justin Sun talked about a bit in the media, but XRP still up 15% over the past week, just down 2% recently as shown by sentiment. So starting with equities, as is our weather vane for risk, we have a larger range here drawn that we've been trading in and out of since the start or since the end of September. So about 2 solid weeks now. Ping-ponged around here a bit. We deviated up higher last week. You know, we had that big Monday rally. Not seeing that today, but we are now below the range and headed towards the lows of basically last Sunday and last weekend. So very interesting to see that starting for the week. Obviously tough to really short the lows, but if we zoom out, you can start to see a bit of an uglier picture, starting to form. So basically, bulls do not want to see this close below 35.90, 35.88. We're currently at 3,600. So if we close below the 35.90 number, then we're probably facing, lower price action down to the levels that we laid out last week, which were right around here. And then obviously we have these lows down here. So if we end up breaking, and you can obviously see off the weekly too, that would be closed beneath the 200-day moving average on the weekly, which would not be positive. So back to the hourly, we really want to close above this POC right here. If we close below it, it's likely going to signal lower price action. If we close above it, there's a chance to, deviate again from the range, bounce here, and then head back up higher. Of course, Friday is going to be CPI. So, you can see how we might just ping pong around here all the way until Friday. Potential, maybe another deviation. It's tough to call bullishness here because there's no real catalyst, but, based on just technical trading prior, it's tough to think about the markets dumping prior to CPI, considering that's such a big number. Of course, we could front run it. and just dump all week. That's certainly plausible. We definitely want to see what happens with that main number right there. As for Bitcoin, when we spoke last weekend, we were right around here talking about this demand zone, and so this demand zone worked out. I guess if you were piping longs out of it over the weekend, we did have an inverse head and shoulders that completely broke down very early or very late last night, I should say. So that kind of got invalidated, but we're still basically running on this 1-day trend that was valid since November 2021. Obviously, we broke above it. People thought we were going bullish. We had a big dump last Friday, and then we've been dumping ever since. So basically, we're back to that 19.1 number, which is basically the low end of the range that we traded in last week, or 2 weeks ago, I should say. We haven't been below 19.1 since briefly, about 10 days ago, but we did trade below it quite often in that mid-September range. So it does make sense that, it makes sense, that we caught here, first of all, because this is the lower end of that range. We are at that 19.1 number. There's obviously a lot of liquidity here. There's a lot of liquidity here. So I think people are definitely thinking that some sort of recovery may happen to 20K at some point. And we're obviously still riding this trend. You can see how this trend kind of caught every single time since we touched it. But that doesn't mean we can't move, of course, lower, tag 18.8 or 1900 flat before deviating up. We are still kind of in where you would expect longs to try and take action. But of course, if equities keep, running down, then we could see these lows, which would be 18.8 first, and then maybe 18.5, 18.6 in the near future. Of course, it's tough to short at the lows. Bitcoin hasn't been terribly volatile, so it's not offering good, continuation or swing trades really, unless you were really betting on bullishness here or bearishness there. But it's been, very quiet weekend so far, more or less, of course, other than these small percentage dumps. So you would expect some sort of recovery here just based on the fact that we're at 19.1, we're at the bottom of the demand zone, and we got to tap at that downward trend. So you would expect it to try and come up here, try and, flip this level and head up here. But of course, if we break down, then we're headed, pretty much to 19.9 or 1900, and then 18.8 potential for more deviation or consolidation, and then heading lower. So nothing is looking really good right now. I don't think anyone's crystal ball is working at 100% for the market right now. And of course, we do still have bearish pressure due to the macro that is very much visualized in the S&P 500. And of course, the dollar very much cranking. We are now again at the highs that we saw last Monday, which of course we came off of, but this does look quite strong, and we never made it below, 112. And, of course, we tagged that moving average and then just continued higher. So, of course, if the dollar continues higher, we would expect risk to be suppressed as it is right now. But clearly it's trying to hold on. We haven't seen just a straight out dump yet, but it's, of course, not looking very positive. So ETH, and of course, I'm sorry, we didn't check out sentiment. Bitcoin, bearish sentiment, ETH, continually bearish. So nothing, very positive in that direction. And, of course, we do want to see this curl up, but could get rejected at 50. We didn't, we had a pretty clean slice down here. So, you really want to see sentiment recover. And of course, if it can't recover, then, that just adds another data point on to bearish continuation. So looking at Ethereum, very similar to Bitcoin, a little bit more range bound. I drew this for the Trade the Chain community, not very sexy, but a symmetrical triangle. Typically, you see continuation, meaning we moved in this direction. So you would typically expect some more ping pong, and then, potentially continuation down. Of course, if CPI is good, we could move up, but I wouldn't expect any breakouts for Ethereum out of this, symmetrical triangle until CPI. If a breakout did occur, we would look for a confirmation where it broke down, confirmed at the top or at the trend, and then moved lower. Of course, if we broke higher, we would look for, consolidation and a catch above the trend before moving higher as well. We could definitely deviate in and out of this range, and fake out a couple of swing traders, very much so. So unfortunately, not very volatile, not very sexy. But we're literally stuck in what, basically a consolidation pattern that's either going to break obviously up or down at some point in time. And typically this formation does signal continuation. It is important to note we do have a huge amount of liquidity here at 1330. So if we do catch here, 1330 could happen. If you wanted to press along there, then of course, we do have a lot of liquidity back at 19.4. If you wanted to press along there, obviously we did have this drop to 19.1 and back to 19.4. So we could potentially do that again. And this box technically is now kind of a range, given the fact we had 2 taps at 19.1 and multiple taps at 19.4. So, there is literally nothing clear. Sentiment is pointing bearish. The dollar is pointing bearish. Equities are pointing bearish, but of course we're at the lows. It's tough to short the lows. And if you did not play the shorts this morning, on that volatility, like we said, every single session, the best trades are at market open and the daily close. That's why we put all the good trades in the Trade the Chain community at market open. That allows our traders and our community to obviously assess, make the trade, go on with their day, and then continue to track, throughout the following subsequent hours. So I wish everybody the best of luck. I currently have no trades. I will probably look to see how these levels react in going past lunch and into the daily close. I would expect just continual ping-ponging around without any serious movement in either direction, unless the dollar goes haywire until CPI, because I think CPI is going to be that big data catalyst that everyone's going to kind of be sitting on their hands for. Everyone's just, and of course, if we do start to front run, into CPI, in a bearish direction, then, I think people will expect that CPI is not going to be good. And if we somehow front run in a bullish direction, then you would expect that somehow people seeing that CPI is going to be bad. But it's more likely to have a very narrow range going into CPI with max pain, because traders are going to want to trade based on how they think the charts look. And of course, everyone's waiting for the fundamentals. So best to be extremely careful this week. It's trading CPI can be difficult. We're going to go over it later this week. But we do have a lot of big things coming up. The Cent Galaxy website and white paper launch today. You'll be able to sign up to be the first to use Galaxy. So that'll come out very shortly today. So good luck, happy trading. Keep an eye out for Cent Galaxy news. And of course, stay up to date in the Trade the Chain community for all of the important trade and trading ideas and analysis. Good luck. Happy trading. See everybody tomorrow.